I have two charts here. They look very similar because they are both trendline break plus V reversal. On the left, you can see that we have the trend line defining a channel, the market breaks down, and then reverse. The same thing for the right chart as well. These two charts are both GBP against US dollars and the 15 minutes charts, just on different dates. But what is the difference? We can see that on the left chart, here is the top of the previous high. The same thing here. However, on the left chart, the market didn't go up to test the previous high. But on the second chart here, it pierced the previous high here. Why do we care? That is because the difference means different profit to you as well. If on the right side, if you can capture this top, that means you can make more profit. That's why as a trader we care very much, and then we want to figure out why. The main reason for the difference between the two charts is because of the market strength. Let's take a look at the left chart. On the downside here, what do you see? These four bars are consecutive trend bars. What's the characteristic for trend bars? First, the body accounts for over 60% of the whole candlestick. Second, the trend bar means strong strength to the direction. So this means the strong strength to the downside. Let's have a look at the right side chart. It's the same thing. On the downside here, there are consecutive bear bars. However, you can see the bars. There's a doji bar. There is a bar with a big tail at the bottom. Bar with a tail at the bottom. Not many trend bars. That means the strength to the downside is not very strong. So the conclusion is, you can see that on the left side, the chart has a very strong downside strength. But on the right side, the downside strength is not very strong. That's why when the market reverses on the left, the buyers cannot go up too much. On the other hand, the buyers on the right side chart, it goes up to pierce the previous top. Another way to look at the market strength. On the left side, from the top of the downside here, you can see that there are 9 bars, 9 15-minute bars. That means in a very short period of time, the market goes down promptly. But on the right side, the same thing. From the start of the downtrend here, there are 14 15-minute bars. So the bear is not very strong. That means it takes longer time for the bears to go down. So this is another angle to look at the market strength. Next time, when you see the market is very strong on the day, when it reverses, you want to get out of your position at the beginning of the downside here. On the other hand, if you see similar here, you want to hold your position to make profit until the end of the trend here.